Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Bazaar Morning Call. I'm Lata Venkateshan. With me are Anuj and Reema, sitting in, of course, for Sonia. Well, important day today because the Nasdaq has hit all-time highs. We are starting on a high, especially after the Fed Chairman Powell gave up practically a very, a triple A for the US economy, or at least a double A for the US economy. The strong statement has, of course, driven the dollar higher. But there are a lot of positives going for India. The crude number continues to tick below the $72 mark. And yesterday, Indian bond yields closed at 7.75. That's some kind of a near-term low. So there is a spring in the step, you will have to say, for the bulls. And if you want to look at some post-market numbers, whether it was Z or Tata Sponge or Syntex, there was enough in those results to continue the tailwind. So for me, the big question will be, despite the dollar index being above 95, the Asian markets are taking it as a strong comment on the US economy. So does all this add up to enabling the bulls to charge beyond that 11,050 mark? That really, I think, is the crucial question. Hi, Reema.
Hi, Lata. Hi, Anuj. So directionally, the global cues are positive. And what a great rebound seen in Netflix. At one point of time, it was down close to about 14%, finally ended lower by only 5%. And the fact that there was buying at the dip suggests perhaps the momentum is still very much intact in the FANG stocks. That's Facebook, Alphabet, Netflix, as well as Google. And for Nasdaq, it was the third record close in a matter of 1 month. But Anuj, back to our own markets. Yesterday, because crude oil fell close to about 4%, we regained that 11,000 mark. The outperformance came in the mid-cap space after hitting, close to 10, 11-month lows. Do you think this mid-cap outperformance can continue from here on? It was the start of the outperformance there.
Morning, Reema. Morning, Lata. Yesterday I wore a green shirt and a green tie because, yesterday it looked like the market was in for, a big pullback rally because on Monday the decline looked very shallow. Yesterday's rally was also shallow. It was not backed by any kind of volume. Just like on Monday, there was no volume on the sell side. Yesterday, there was no delivery buying in any stock except Maruti. I mentioned yesterday, on Monday, there was no delivery selling in any stock. So right now, this market is prone to big moves. Impact cost is high. Basically, you buy a few stocks, and it goes up 2%, then there's cascading impact. Similarly, on the dealer sentiment is down. Right now we're talking about all good things because all of a sudden the global screen is looking good. The dealer sentiment is down. Right now we're talking about all good things because all of a sudden the global screen is looking good, and SGX Nifty is up 40 points. So it's that kind of a market where you will see these kind of moves. The Nifty and the Bank Nifty are very close to all-time highs, and normally there is some resistance at all-time highs. So let's see. The mid-cap index was up 415 points yesterday. 103 points came from Federal Bank. So of course the rally was big, but there was one large stock making a big move, accounting for 25% of that rally. My basic premise is that this dichotomy between A group and B group could continue, and the index, it's going to be that kind of a new high which everyone is going to hate because the index hits new high and your portfolio is in the pits, down 30-40%. And while you may keep having these kind of rallies, yesterday the biggest gainers were basically the stocks which were bouncing back from 52-week lows on short covering. So there's still problem in this market. That's not going to wash away with just 1 or 2 days gains. For today, what was interesting for me was the FI data, the fresh shorts added in index futures and options. I think those shorts have been taken with a view that 11,070 perhaps would not be crossed again because you've gone there twice. So for me, 11,070 is very crucial. If 11,070 is crossed, you will see a massive short covering because there are shorts in the system. But if again you fail at 11,070, then you'll have to say that you've again tested the higher end of the range and are going back again. But this hope that if you have that you're going to soon get your prices back on B group stocks, is just a hope trade, and hope is not a data point.
No, it's not. But there is a trade. That's all.
Yeah, there is a trade. Obviously, there's a trade. There's a short covering trade. Just like yesterday, you saw the most beaten down stocks rally the most. That may continue for some time, but same group of stocks is vulnerable to a decline the moment global screen turns. Also, crude is a big factor now. It's 71, 72. I think if that goes below 70,
I was just mentioning the trade on that ground.
Yeah.
You have crude at 71, you have bond yields at 7.75, you have a RBI policy round the corner. The MSP and all are completely digested. So, this becomes a very big, it's even below 7.75, 7.74. This is a big fuel for a lot of stocks. And then you have the PSU capital announcement. Of course, it was all expected. But some stocks, like just as Federal flew off, Federal's performance also tells you that you can get surprises, pleasant ones, from corporate-facing banks. So Federal will not be seen in isolation. It will be seen as probably heralding a category. And you saw that South Indian Bank move. And the PSU banks. Corporation Bank has got an outsized gain. I mean, you could add even IOB, but Corporation Bank has really got a good dose of capital. So all these could make for a trade. Now, that it is, whether it's sustainable or not, the markets will tell you. But the fact that all of us are so skeptical about the rally probably is another tailwind for the bulls.
All right, let's put on board some other cues. The monsoon session of the Parliament will begin today. Remember, the last session, the budget session, was almost a washout. And even now, reports indicate that the opposition has planned a no-confidence motion ahead of the monsoon session. There are 18 bills which the government wants to introduce in this particular session. And the key ones include amendments to the Insolvency and the Bankruptcy Code, as well as the Fugitive Economic Offences Bill. Also, we've got a whole host of earnings. The big one in the Nifty pack will be Ultratech Cement. But that apart, you've got a Mahindra CIE Automation, a Reliance Communication, a JK Tyre, HT Media, and a big day for mid-cap IT as well, when NIIT Technology and Mindtree, both these stocks are virtually at record levels. Mastech as well as Sasken Technology will be reporting numbers. So,
yeah, just one more word. When I was talking about banks, HDFC Bank has been purchased by HDFC, the shares, at higher than what the market anticipated. Originally, it was expected, I think, 2050, and Abhishek tells me that was what the market was expecting. Now, 2175. And, if HDFC Bank can move even a little, it can make a big difference to the Nifty. And
maybe they're trying to set a benchmark, because HDFC Bank also wants to raise money via the QIP. So maybe this is one step to set a benchmark.
Yeah, and yesterday in late trade, HDFC Bank made a move. Through the day it was down, but it made a big move. And that is the one issue here, that why index is not going to go down too much, because you have such a strong support from the likes of HDFC Bank, HDFC, TCS, Reliance, Infosys. So these are a group of 7-8 stocks which are really so strong, and so much money is moving to these stocks. So that's why the index is still at all-time high. Portfolios are nowhere near all-time highs.
This seems to be a global phenomena, because even in the S&P 500, a handful of technology stocks have contributed 80% of S&P 500.
Actually,
80% of S&P 500's up move this year has come in from just a few technology
FANG stocks account for more than half of S&P's market cap now, so obviously.
All right, let's tell our viewers what our wise experts have to say going into trade this morning. Neelkanth Mishra of Credit Suisse says, while the Sensex and the Nifty are at or near all-time highs, the broader Indian market has lagged global equities by 8% in 2018 so far. He says a weak INR and a sell-off in mid-cap, small caps have driven this. He says the BSE 500 is down in 2018 so far, as small caps are down 20% plus, and this suggests a quality preference, as also reflected in the global equity-only risk appetite being the lowest since 2011. Neelkanth says an improvement in risk appetite can reverse some of these preferences. They recommend ICICI Bank, SBI and Hindalco.
Okay, there it is, risk and economy-facing stocks. Well, more equity news coming your way, actually more crude. Jeremy Hale of Citi says price momentum may have lost steam in the near term. He's referring to crude. He says they are not turning outright bearish on oil, but don't want to miss out on a tactical opportunity given the sizable net long positioning overhang and some markets playing catch up on the bearish tariff trade. But he adds, perhaps also worrisome for oil bulls are the underlying developments in the supply backdrop. Jeremy says certain output fears are diminishing and eyes are on the major OPEC producers. And this backdrop looks even more worrisome if you add the US and Russia to the OPEC supply. So that's a bearish comment for you on Brent.
Okay, let's get you some money market views then. Pramit Brahmabat of Veracity says technically rupees close above 68 rupees 50 paise will open further room for appreciation, and it may test 68.20 levels. He says optimism from domestic equity markets may add more fuel to it. He expects the spot USD INR pair to trade in a range of 68.2 to 68.8 against the dollar for the day.
All right, on bonds, Dhaval Dalal Edelweiss says positive sentiment in bond markets is likely to continue after the Reserve Bank announced a 10,000 crore OMO purchase for July 19. He expects 10-year benchmark bond yield to trend towards 7.7. It's 100 DMA and finds support there. He expects crude oil to trend towards $69 per barrel, which is the 200-day DMA in the near term. He says market participants will also track progress of monsoon, which has actually been patchy in the north. He expects the 10-year benchmark bond yield to trade between 7.7 and 7.8 in the near term. Says a weekly close below 7.7 could open up space for further decline in the near term.
Okay, over to Mangalam then for the world view.
Well, if you're a fan of mathematics and enjoy patterns, there is a representation of perfect arithmetic progression out here in the US markets. 0.2% on the Dow, 0.4% on S&P 500, and 0.6% on NASDAQ. Why is NASDAQ outperforming? Well, it's at a record high. Two stocks leading that gain. Amazon, that one hit a record high yesterday. Remember, there was data which showed there was strong sales for the first 12 hours of Prime Day. And if anecdotal evidence is something to believe, we had a lot of buzz in our office as well. Netflix, that stock was expected to be 14% lower in trade. Yes, it did open 14% lower, but it recovered and closed only 5% lower. Bank of America Merrill Lynch said this drop was a compelling buy. Fear on the Wall Street did a bit. We saw the VIX rise day before yesterday, and yesterday it came down by about 6%. The dollar index, that one's near that 95 level again, and this one after Fed Chair Jerome Powell gave an upbeat assessment of the US economy. Across the Atlantic, we saw some green across the European indices. The DAX outperforming. Individual stocks, the one that was on our radar was ThyssenKrupp, up 9% after the company's chairman resigned following CEO's exit last week. Russian as well as Brazilian indices did well as well. Russia was lower. Brazilian index has recovered more than 12% in the last month itself. The Nikkei is outperforming because the yen is closing in on that 113 mark. The Asian markets are in the green, and the SGX Nifty in the green as well.
Okay, thank you very much for that. So those are all the economic cues you should know, but political cues are not unimportant. The stage is set for what promises to be a fairly stormy monsoon session of Parliament. Nothing new there. It starts today. Speaker Sumitra Mahajan met lawmakers across all party lines last evening to seek their support for the smooth functioning of the House. And that's not all. Prime Minister Narendra Modi also reached out to the opposition, seeking cooperation for smooth functioning and passage of bills. But a former NDA ally, the Telugu Desam Party, has moved a no-confidence motion against the government, and the Congress has also threatened to do the same. Well, so it looks like the storm will continue, but let's at least tell you what's on the agenda behind the storm. Parikshit Luthra, our colleague, is waiting by.
25 bills are going to be brought for consideration and passing in the monsoon session of Parliament. 18 new bills are going to be introduced. This includes the Insolvency and Bankruptcy Code Amendment Bill, Fugitive Economic Offenders Bill 2018, Muslim Women's Bill or the Triple Talaq Bill, Transgender Persons Protection of Rights Bill, and also the contentious RTI amendment that the opposition and activists have been talking about, because they feel this is an attempt by the government to dilute provisions of the RTI Act 2005 and make it weaker. The Prime Minister on his part has tried to reach out to all opposition players, saying that the government will leave no stone unturned to make sure that all issues are discussed on the floor of the House. The Congress and other opposition players are having strategy meetings, and they are going to corner the government over the issue of lynchings, cow vigilantism, jobs, MSP, foreign policy, women's safety, reservation. In fact, the Congress and TDP have also promised to move no confidence motions in Parliament. This is to put pressure on the Narendra Modi government. They will not succeed as they don't have the numbers. But we can only hope that this monsoon session will be more productive than the budget session, which was the least productive budget session in 18 years. In fact, Parliament spent only 7% of its time on legislative business in the last session of Parliament. Let's hope things are better this time around.
Parikshita, take your point entirely. One would wait for some of these bills, at least the insolvency and the economic fugitive offenders bill, to get passed. Maybe even the Prevention of Corruption Act amendments should be taken up because it's definitely impacting business. One hopes, of course, that things will be better. We take a break. We are coming back with our entire research team who will detail to you TV18's top 10 list of stocks.
Welcome back. There's green on the market screen after the Dow inched up higher for the fourth straight day in a row. The SGX Nifty is up.
Down even in a strong market yesterday. It remains in a bear market, trades at 20-day moving average. Normally, if bull market stocks go to 20-day moving average, you buy them. Bear market stocks at 20-day moving average, you normally sell them. So that would be the stock on the downside, I think.
Okay, the PSU banks led the rally yesterday. The index was higher by more than 3.5%. But Lata, 5 PSU banks will be capitalized by the government?
Well, first of all, thank you for saying guys and girls. I've never been treated so well in a very long time. Okay, just to put the numbers into perspective, it is expected lines in terms of the capital coming, but the distribution of capital is interesting. Just to read through the numbers, 2,800 crore for a large bank like PNB, which has, about 8 lakh crore of balance sheet advances book. Corporation Bank, relatively 1/4 of PNB, gets almost the same amount, 2,500 crores. Allahabad, 1,790. IOB, again a small bank, getting 2,000 crores. And Andhra Bank, again a small bank, getting 2,000 crores. So clearly the biggest advantage is going to be for Corporation Bank and IOB, followed by Andhra Bank, because they are, there is a substantial jump in their capitalization. As you can see, the current Tier 1 ratio for Corporation Bank rises to 10.17. For IOB, again, current is 7.17 and it rises to 8.76. So the biggest difference, about 2% percentage points almost for Corporation and 1.6% for IOB, and for Allahabad and Andhra as well, it's fairly decent. It rises by about 1.5 percentage points. One expected more for PNB. So my sense is PNB may be a little weak, but the other 4, especially Corporation, will run.
And the timing will be important because PNB has interest payments worth 1,500 crore, which is due on their bonds, the additional bonds in Tier 1 on the 25th of July. So they'll need that money coming in.
Capital was designed primarily to
make sure they don't default on their interest
payments. I have a feeling PNB, we should go with a slight red because one was expecting more for PNB. And it ran yesterday.
Exactly.
So PNB...
and if you're chasing PNB today, there could be a bit of a problem because it was up 6% yesterday itself.
So IOB and Corporation Bank definitely in the green. Abhishek, over to you on HDFC Limited and HDFC Bank.
Well, for SDFC Limited, the SDFC AMC IPO opens on 25th and the issue is priced... Issue is priced at 1,100 per share. So SDFC Limited owns about 57.4%, and through this IPO, they will look to dilute 4% of their holding. The balance 53.4% will be valued at close to 12,400 crore, given the fact that the market cap of this issue is close to 23,300 crores. The issue size is at 2,800 crore, and the entire issue is offer for sale only. Coming on to SDFC Bank, they have allotted 3.9 crore shares to SDFC Limited at a price of rupees 2,174. So in total, they have raised about 8,500 crore from SDFC Limited, and SDFC Limited holding now increases by 1.2%. Back to you.
Okay, thanks a lot for that. Sonal, Z Entertainment numbers were good.
They were actually largely in line numbers, Lata. Revenues absolutely in line with what the poll was suggesting. However, margins, they gave a positive surprise, came in higher at around 31.9% versus a poll of 31.5%. A domestic business that was robust. Domestic ad revenue growth at 22.3% and subscription revenue growth came in at 12%. However, there was some weakness seen in the international revenue growth. Subscription revenue that declined by 6.5% and ad revenue that came in at 2% versus an expectation of 15%. Management, however, keeps its guidance of 30% plus margins and subscription revenue growth in low teens. Brokerages, they keep up their positive stance on the company. However, they have cut their EPS and the target price for the different brokerages have cut their target prices. That is because the company said they will be investing more in the content costs. Back to you.
Okay, Sonal, thanks a lot for that. So that's Z Entertainment. Ashok Leyland, of course, came out with numbers in market hours about what's the opinion from brokerage houses. Mangalam is filling in for Sonia. Mangalam?
Absolutely, Anuj. So filling in for Sonia, there is a divergent view coming in on Ashok Leyland from brokerages. They're dovetailing their prior views itself. So Morgan Stanley, for instance, they've said that the margins were a beat. Margins were driven by low raw material costs. They remain positive on the stock with the target placed at 178 rupees per share. On the other hand, Macquarie, they believe that, the margins that came in improved year on year were actually lower quarter on quarter. The raw material as a percent of sales actually did increase by 18 basis points. Add to that, demand uncertainty in the near term may keep the volatility alive. So they remain underperform on the stock with a target price of 113. Remember, it is way off its 52-week high. So we'll have to keep an eye out on how that stock pans out in today's session.
Okay, thanks a lot for that. Speaking of results, Tata Sponge was good, Nigel?
Well, the numbers look very good, Lata, and in fact, the street was expecting something like this because sponge iron prices have moved up drastically in the last 1 year. So on the top line, there was a good growth of around 49%. Margins as well, there was an expansion out there. Though on a sequential basis, there was a bit of a decline of around 150 basis points. And the profit number as well was up by close to around 49%. Good numbers. The stock has corrected a goodish bit from the top, so it should open up in the green.
And thanks for that. Ekta, over to you on the pharma stocks on your radar.
Yes, a couple of approvals that the stocks would be reacting to. I'll start with Sun Pharma, which has received approval for a flu injection. So the street probably could be a little more optimistic about it, considering that Halol is an injectables facility. So is this probably from a Halol? That's probably going to result in the stock seeing some amount of buoyancy. But separately, it is Torrent Pharma, which has also received a final approval from the US FDA, and Cipla, a tentative nod for a renal drug. So those stocks could be in focus as well.
Okay, thanks for that. Federal Bank, of course, was the toast of the market yesterday. Abhishek, what are the brokerages saying?
Well, Lata, to begin with, if you look at the delivery volumes, 15.4% of the equity were marked for delivery yesterday. The brokerages have maintained their stance. Largely, they are on positive side, and they have cited that the inexpensive valuation for Federal Bank actually is a positive sign, given the fact that the results were ahead of estimates, and the most important point being that the worst of asset quality woes is behind for Federal Bank. So Deutsche Bank, Jefferies, Motilal Oswal, Prabhudas Lilladher, everyone has a buy rating and a target price ranging from 110 to 130 per share.
Okay, thanks for that. Anyway, the price targets are have been retained at around 120 rupees. Need to know that. Anisha, more results?
Well, yes, Lata, I have a long list and I'll try to go through them quickly. First up, Rallis on my radar because the revenue jumped there by 30%. The operating profit came in at around 83 crores and a profit growth of around 21%. I expect that stock to react positively. Syntex Industries also had a good set because the revenue jumped around 35% this quarter. The EBITDA is up around 44% because the margins expanded by 80 basis points. As a result, the profit is up around 11%. Other than that, Crystal also came out with a decent set of numbers. The revenue showed a growth of around 7%, but it is the profit that jumped by around 15%, led by the expansion in operating margins. The management says that their operating efficiencies and productivity and technology initiatives are helping them sustain the margins, so that's a positive. Other than that, Jindal Stainless also came out with a very good set of numbers. The revenue there jumped up by 56%, the profit expanding to 91 crores versus 41.5 crores. That is because the sales volume for the company jumped up by around 51%. 8K Miles, well, we already have the standalone FY18 numbers, and the company now came out with consolidated FY18 numbers, and they also look strong because the revenue jumped by around 61% and the profit nearly doubled year on year. If you're looking at Nucleus Software, well, that has reported a bit of sluggish set of numbers, given the fact that the revenue is up around 2% and the net profit is just up around 4%. Back to you.
Okay, Anisha, thank you very much for that. A quick recap then of the top stocks this morning. The stocks with positive news are Maruti Corporation Bank, Allahabad Bank, Indian Overseas Bank, Andhra Bank, Federal Bank, HDFC Limited, HDFC Bank. So a lot of focus on financials. Z Entertainment, Ashok Leyland, 8K Miles, Tata Sponge, Sun Pharma, Torrent Pharma, as well as Cipla.
Okay, you also have Rallis and Syntex Industries, Crystal, Jindal Stainless, quite a few stocks with negative news flow. These are PNB, Balrampur Chini, possibly, and Nucleus Software as well. So put that on your radar.